all the banks got scared about the collateral, that it wouldn't be good. There's several claims on the same Treasury bond. So they stopped lending to each other. You saw the rates of overnight spike to 10% briefly. The Fed had to come in and start pumping billions of dollars. And then as of a couple of days ago, Jerome Powell was giving a speech, says, we might have to do something bigger than that. And I think that's the big bomb that's going to hit either this weekend or the beginning of next week.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we have a fun show planned for you today. As you can see, my good friend Bix Weir is kind enough to join me. And we're going to be digging into these repos, some recent announcements from Jerome Powell, also how that's going to affect the silver market. And lastly, I have a couple questions on the interesting Veritasium situation that's been ongoing that some of you may be familiar about. So go ahead and hit that subscribe button before we get started. And with that said, Bix, it's great to have you on again. How is everything going with you, my friend?
It's crazy busy on the road to Ruta. I got my new backdrop back here. That's what I feel like these days. I'm going like 100 miles an hour down the road. And absolutely everything I've been talking about for the last since 2001 is actually happening on almost every front. So it's scary, but it's exciting to see all this come to fruition, and hang on tight because it's going to get crazy.
Yeah, it sure is. And again, I really appreciate, I think I found you a couple of years ago when I was trying to find other people who were seeing what I was seeing in silver. And, you really have done a good job of pointing these things out. And like you said, they're coming to fruition now. And something you've been focusing on and helping me understand in the past couple of weeks, maybe a good place to get started, are the repos, reverse repos, and all this banking insanity that sounds a lot like quantitative easing, but maybe you can give folks an overview of what's happening and take it from there.
Yeah, sure. Yeah, the funny thing is people hear that word quantitative easing and they think that's no big deal also. I mean, quantitative easing is bailing out the banks because they got in trouble in one way or another. And usually it has to do with collateral. And that's the situation that's going on now. They're saying it's the cash. There's just a cash shortage. No, they've been sinking money into derivatives that are rehypothecated all over the place. So it's kind of like nobody knows what collateral is good, sound collateral, meaning, JP Morgan is the only owner of that specific silver contract or Treasury bond or anything. That's not true. They completely rehypothecated, meaning it's a fractional reserve system, not only with money, but with the assets they hold on their books in the derivative market as well. So the central bank, basically what happened is all the banks got scared about the collateral, that it wouldn't be good. There's several claims on the same Treasury bond. So they stopped lending to each other. You saw the rates of overnight spike to 10% briefly. The Fed had to come in and start pumping billions of dollars into the overnight market, into the 14-day repo market and reverse repos. So this balloon of bailout, although a lot of it's not cumulative because they all have expiration dates. On the expiration date, the collateral is given back and the money's exchanged. So, but we've gotten to the point where they've done so many 14 days and they're doing a 40 or $50 billion every night. It's up to about $240 billion. That is that's the number, and it's going to grow and grow and grow. And then as of a couple of days ago, Jerome Powell was giving a speech, says, we might have to do something bigger than that. And I think that's the big bomb that's going to hit either this weekend or the beginning of next week.
Yeah, actually, I have that quote pulled up here because we've been seeing those repos, again, it was phrased as overnight, when you're 2 or 3 weeks in and they're getting longer, it stops being quite as overnight. But earlier this week, there was an article from Wall Street Journal. The Federal Reserve will soon increase its purchases of short-term Treasury securities to avoid a recurrence of the unexpected strains in the money markets last month. And then I believe it was yesterday or sometime this week, Powell, a direct quote, "Indeed, my colleagues and I will soon announce measures to add to the supply of reserves over time." doesn't sound like it's temporary anymore.
And it's not, and it's different. If you listen to what they said they're going to be buying treasuries and buying mortgage-backed securities instead of the lending repo. The repo market's a lending market where they're just, it's overnight. You lend them the security and they give you the cash for 24 hours or 14 days or whatever the term is. The difference is that they're going to be buying these toxic assets that the banks have no idea who owns these assets. The only place to hide them, since other banks won't take them, is at the Fed. So the Fed will be buying toxic assets, creating money out of thin air to buy these assets, giving the money to the bank, and so the bank can move forward. But the question is, how much are they going to have to do? My guess is ultimately it will be so big that they're going to have to come to Congress. And that number in my head I've been talking about for about 2 years now, is $20 trillion. In 2008, they went to Congress for $700 billion. This time it's going to be $20 trillion. I'm hoping, above all hopes, that that we say no. We as people say no. Who knows what Congress will do? Congress isn't going to agree on anything. The Democrats would love if Trump's economy imploded. Trump's economy is completely fake. I mean, it's market rigging at its finest by Steve Mnuchin, the head of IT from Goldman Sachs. So we're at that point where same thing happened in 2008, but it's so much bigger now because the Treasury bonds are the ones that are in question. And nobody knows about the clean ownership, and it gets to the DTCC and all that mess. And yeah, it's going to get just really ugly over the next few weeks.
Yeah, and Bix, you mentioned something that I've heard you talk about before. Maybe one of the areas I agree with a lot of the things you said. This one I had some questions about, where I know you said that the public won't stand for a bailout. Although I guess where I wonder is that that part I agree with, although what the public wants often is not what Congress does. So I could see the public being against that, but do you think Congress would actually say no, whether they feel it's correct or not?
Well, you've got all sides really who are going to say no. And remember, back in 2008, when pretty much Congress was still kind of civil to each other, they at first declined the bailout. The bailout did not pass. The stock market dropped 50%, and then there was an emergency. This time,
I remember that day. I was sitting on the trading floor and just watching it melt down. So
this time's different. Congress doesn't want to agree on anything. They can't agree on what kind of coffee to put in the coffee machine. And there are massive forces on the side of the Democrats that want Trump to fail. They want this economy to fail. And basically, if you don't bail out the banks, it's automatic failure. And then and they have a candidate who's probably the most anti-banker candidate since the beginning of time. It just happens to be a socialist. It's Elizabeth Warren. Now, Elizabeth Warren was knee-deep in the 2008 bailout. I think she ran one of the oversight committees of the banks. And I would say to Elizabeth Warren, hey, you were in charge of this oversight, and we're in a worse position than we were back in 2008. What did you do while you were overseeing these banks? That would be my argument, from Trump. But yeah, I don't see anything being agreed upon in Congress. I see massive amounts of debt in the United States. Our biggest problem is debt. And if the banks go, the debt goes. So yeah, I don't see a bailout happening. Yes, savings and checking will go as well. But they've been looking for a way out of this for a very long time. The Fed has the people in the know behind the scenes, the good guys, as I call them. They wrote it in the comic books at the Federal Reserve Bank. Run the system as long and as hard as possible, soaking up all the benefits until you can't do it anymore. And we've hit that point where, how they say in Congress, oh, the debt is unsustainable. The situation's unsustainable. And it's all this unsustainable stuff. Well, we're going to find out what unsustainable is when it is no longer sustained. As in, Steve Mnuchin takes his little finger off the computer rigging model, computer program, and then we have a shakeout, shall we say, a big shakeout, as in the destruction of the unbacked fiat system.
Yeah, and I've learned to be careful about rooting for gold and silver going up because I get it. Things happening in the world may not be ideal, although to the degree you look at all the fraudulent, nefarious stuff that is accomplished with the dollar going, weapons of mass destruction that didn't exist, blowing things up, building tanks, dollar inflated, losing 99% of its value. I mean, you'd think even if we're using tulip bulbs at this point, the regular person would be better off. So we'll see how it shakes out. Although, touching on what you were just saying, aside from the fact that based on what you said, Elizabeth Warren sounds like she'd be a perfect fit for the CFTC. But back to the...
hey, just one more comment on, rooting for gold and silver when bad things happen type of. That doesn't happen anymore. That hasn't happened in years, that gold and silver move because there's economic news or because war breaks out. That was taken out of the equation when the derivative manipulation kicked in high gear in the comics about 30, 40 years ago with the computer integration into silver price decisions. So yeah, you can have a nuclear bomb go off in New York City and it wouldn't move the price of gold or silver at all. That's how dislocated gold and silver have become because of the manipulation.
Yeah, and as we'll get into when we talk about silver, apparently the Fed cutting interest rates makes silver go down for some reason. I haven't quite figured out yet.
Point proven.
And actually, I think I figured out how to do a screen share, so we'll even have a chart for folks. But a few last questions on the repo. I've heard two schools of thought. A lot of folks think that this could be indication that a big bank is close to failing. We saw that zero hedge report about JP Morgan. Obviously, Deutsche Bank, have been hearing for years, is close to being in some real trouble. So we've heard about maybe a big bank is failing, which is why this is happening now. Or also a little bit about what you touched on earlier of the quality of collateral. I've heard some folks speculate we could be seeing treasuries not accepted as a collateral, and that's why they're needing cash. Any thoughts on those two scenarios?
I think it's all of the above, truthfully. The JP Morgan, I think it has to do with silver because Ted Butler's been saying, hey, there's a big, gigantic silver loss position that had to be reported at the end of the quarter. The only way not to report it, if it was JP Morgan with that short position, they can say, well, they offset with the physical that they own, hidden away in their little storehouses. That's potential. I mean, if you're looking at, I know JP Morgan increased their derivative book by $11 trillion in the first quarter of this year, which makes them the largest derivative holder in the world, overtaking Deutsche Bank. It could be that Deutsche Bank offloaded a bunch of toxic derivatives onto JP Morgan so that they could survive, and JP Morgan being the stronger bank. There's a million things that could happen. The key is that something is happening and it's not slowing down. It's getting worse, and they're going to have to put more and more quick fix-its on top of it until they announce some larger fix-it, a QE type of thing. But that won't be enough either. And then it has to go to Congress for the trillions of bailouts. So that's kind of the progression of where we go from here.
So that's part one of my interview with Bix. Tomorrow I'll be posting part two where we dig into JP Morgan, silver, all the things that are going on there. So hit that subscribe button and you'll know as soon as it comes out.